Now let's learn about the types of receipt and expenditure. Revenue receipt and expenditure. All the receipts and expenditure that in general do not entail sale or creation of assets are included under the revenue account. Capital receipt and expenditure. All the receipts and expenditure that liquidate or create an asset would in general be under capital account. Now next up we have the major types of tax revenues for the government. Direct tax. Taxes where the burden of tax falls on the person on whom it is levied. These are largely taxes on income or wealth. Indirect tax. Taxes where the incidence of tax is usually not on the person who pays the tax. Surcharge. As the name suggests, this is an additional charge or tax. For example, a surcharge of 10% on a tax rate of 30% effectively raises the combined tax burden to 33%. Customs. These are the taxes imposed on imports. While revenue is an important consideration, custom duties may also be levied to protect the domestic industry or sector in retaliation against measures by other countries. Export duty. This is a tax levied on exports. In most cases, the objective is to discourage exports of certain items and not revenue. Union excise duty. These are the duties imposed on goods made in India. Service tax. As the name suggests, it is a tax on services rendered, for example, telephone bills, etc. Fringe benefit tax. The taxation of perquisites or fringe benefits provided by an employer to his employees in addition to the cash salary or wages paid is fringe benefit tax. Securities Transaction Tax (STT). Now, in budget of 2004-05, the government abolished long-term capital gain tax on shares, that is, tax on profits made on the sale of shares held for more than a year, and replaced it with STT. Now, it is a kind of turnover tax where the investor has to pay a small tax on the total consideration paid or received in sale transaction. Now, Bank Cash Transaction Tax (BCTT). Introduced in Budget 2005-06, BCTT is a small tax on cash withdrawal from bank exceeding a particular amount in a single day. The basic idea is to curb the black economy and generate a record of big cash transactions. Minimum Alternate Tax (MAT). This tax on corporate profits was introduced in 1996-97 and has been modified since. If the tax payable by a company is less than 10% of its book profits, after availing of all eligible deductions, then 10% of book profits is the minimum tax payable. Countervailing Duties (CVD). Countervailing duty is a tax imposed on imports over and above the basic import duty. CVD is at par with the excise duty paid by the domestic manufacturers for similar goods. Value added tax (VAT). The tax is based on the difference between the value of the output and inputs used to produce it. The aim is to tax a firm only for the value added by it to the inputs it is using for manufacturing its output and not the entire input cost. Now let's move on to the other sources of revenue for the government. Non-tax revenue. Non-tax revenue is the recurring income that is earned from sources other than taxes by the government. They are the revenue receipts that are not generated by taxing the public. For example, interest payments received on loans given by the government to states, railways and others, and dividends and profits received from public sector companies. Grants and aid and contributions. Grants and aid are the payments in the nature of assistance, donations or contributions made by one government to another government, body, institution or individual. Now the grants so released are utilized by agencies, bodies and institutions for meeting day-to-day operating expenses and for creation of capital assets besides delivery of services. Miscellaneous receipts. These are the receipts from disinvestment in public sector undertakings, capital account receipts of the consolidated fund, public debt, recoveries of loans and advances, and miscellaneous receipts and revenue receipts are receipts of the consolidated fund. Now, let's move towards the expenditures of the government. Plan expenditure. This is essentially the budget support to the central plan and the central assistance to state and union territory plans. Like all budget heads, this is also split into revenue and capital components. Non-plan expenditure. This is largely the revenue expenditure of the government. The biggest item of the expenditure are interest payments, subsidies, salaries, defense, and pension. The capital component of the non-plan expenditure is relatively small, with the largest allocation going to defense. Defense expenditure is non-plan expenditure.